Good morning, everybody. Hey, welcome to this Thursday, the 28th of March. Hey, we've got the final revised version of the GDP coming out this morning, as well as some other financial information. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that there are so many things that we don't have control of, but you can take control of your investment portfolio by knowing the amount of risk you have versus the amount of risk you should have in your portfolio. That's why I developed the core retirement design. Give me a call at 863-382-0037 to schedule your core retirement analysis. And with that, we got Dave coming up next.
Light FM. This happens every once in a while, sometimes because we don't know what we're going to talk about because it's quiet. Sometimes it's because we do know what we're talking about and there's too much to talk about. And that's kind of the story this morning. This is time to check in on your finances. I'm riffing because I pretty much said, okay, here we go, Phillip. It's Phillip Statler from Statler Financial Services to catch us up on Wall Street this morning. Phillip, did I give you a chance to catch your breath?
Yes, sir. Hey, doing well today as we get ready to close out. You know, Dave, this is the last trading day of the quarter for the markets because tomorrow on Good Friday, the market's actually closed.
Yeah, I don't. Was my memory faulty? Didn't they used to work a half a day on Good Friday? I didn't realize they were going to be closed until I looked things up on Monday morning.
Yeah, I think they may have used to be, but now they take the whole day off.
Yeah, whole darn day shut down. So this is the final day of the quarter, and I was whining good-humoredly yesterday that the biggest number of the week in terms of market movers, the PCE inflation rate, comes out tomorrow morning when a bunch of people can't do anything about it. I got to believe it's going to be kind of herky-jerky at the end of the day today on the major indexes, just with people taking money off the table based upon not knowing what could happen tomorrow morning, wouldn't you guess?
I would think so, Dave. I mean, today will be a tricky day to see how they navigate through everything to determine, what they hold, what they get rid of for the weekend. Those type of things. The traders are really going to be parsing through stuff to determine what to keep and what to throw out for the weekend.
Yeah, there's just going to be adjustments made. Add to that the usual rebalancing that I think we've been seeing out on the indexes over the last few days. The rebalancing for the end of the quarter so that brokers can send out statements with good news at the end of it, right?
Exactly. They want to show that they're holding the things that are favorable right now, even if they haven't been throughout the quarter. At the end of the quarter, those are the stocks that get published in their different quarterly reports. So, yeah, they'll be doing some dancing today.
Yeah, unpredictable might be the word for the day. To set it up for yesterday, it was a barn burner day. I would look at it and guess that we're talking flight to quality for the moment. Dow was up 478 points. That's almost 1.25%. Standard & Poor's set a new all-time record high, up 0.8%, up $45 yesterday. NASDAQ was up the smallest amount, a little over 0.5%, but still up 84 points. I mean, that was a barn burner of a day on all fronts, and the Russell was up 1.7% since it's been under some pressure so far. I kind of saw it as basically a 100% good day, wouldn't you?
Yeah, you must have had the Russell 1000 because the Russell 2000 was up 2.1% yesterday.
Okay, yeah. My tip sheet quoted the 2,000, but it might have been the 1,000. I had 1.7% though, so 2 is even better. I'll take that happily. Yeah. We start the morning out with some economic data dump news. The weekly unemployment first-time claims come out. I've got it as rock steady from last week, 210,000, that abnormally low number. But the big earth mover of the bunch was the gross domestic product, the final snapshot of the fourth quarter. They were expecting a 3.2% annual pace, which was exactly what it was on the second look. They revised it upward to a 3.4% annualized rate in the fourth quarter of last year. That I won't say that's recovery level, but it's still an above-average pace for a Federal Reserve trying to slow the economy down a little bit. My instinct is that doesn't bode well for our interest rate decrease projections, does it?
It does not. And let me just tell you, the stock market is like not really paying attention because they are basically staying in line with whatever they started out at early this morning. So not getting any favorable movements on the market based on that number.
I'm not seeing much movement on my delayed quotes yet. It'll be interesting what it comes up with on the instant tick stuff that when we do the markets. Other tidbits and news that's out, we have to make mention of the fact that Disney and Governor DeSantis and the state of Florida have settled their differences basically with Disney throwing in the towel. And we were kind of giggling. You think any of the mainstream media is going to put it in those terms on the national news report?
No, not going to happen,
Nope.
Dave. It's not going to be. It's not going to be talked about. It'll be buried somewhere in there, other than they settled.
Yep, they settled. And actually what it boiled down to was Disney said there's no way on earth we're going to win this lawsuit anyway. So they basically came to the table hat in hand and got a couple of crumbs, and that was about it. They basically threw in the towel as far as the lawsuit against the state. You found something interesting in the solar industry. I talk a lot about our local solar power company on the advertising during the morning show, but I gather China's got a surplus problem, huh?
They do. As a matter of fact, Janet Yellen, she warned that because of China's surplus of solar panels and EVs, they could all be dumped on the global market, which could very well cause those industries to spiral downward in price. And so that's going to be interesting to watch. And as she warns of that, because let's face it, solar still is expensive. And so any decline or any pressure on that industry, I think could really be helpful to a certain degree, Dave, in terms of people being able to afford solar without so much debt to take it on.
I agree. And the fact of the matter is, just all the Facebook ads notwithstanding, yeah, you do take on some debt when you put solar in. When I do the advertising, and it's the truth, yeah, it's financed at incentive rates, so your power cost goes down in the process. But dumping of Chinese panels could, at the very least, make some of the firms that use them be able to offer a much lower price for installing it, and that ought to help the solar industry, the installation industry around here anyway.
Yeah, absolutely. And so we'll have to see if that really comes to fruition. But at least it's a warning shot that Yellen is kind of shooting out there.
Absolutely. End of earnings season, and before we start the next quarter, things get a little bit lean. But one of the interesting things was this quarter, the Walgreens Boots Alliance ended up getting thrown out of the Dow 30. Then they recorded this morning. How did they end up doing, absent the boost of being a member of the Dow 30?
So they've got some issues, right? The actual numbers that came in, and the problem is that it's too early to tell if they're actually comparable to what they expected. But they came in at $1.20 adjusted. The expectation was 82 cents. But the problem is the article, this tip sheet points out, they can't tell if those are comparable numbers yet. They're still working through that process. But I will say revenue was substantially more than expected. It came in at 37 billion versus 35.8 billion. So that was some good news. Now they did take a big charge because of their Village MD, where they had that acquisition where they were bringing medical doctors inside their stores to create this big medical company. So that's causing them some issues. They took a big write-off for that. They're down 3% this morning, not huge downward, but other than that, they're hanging in there.
I'm still trying to process how you can say earnings per share is pretty well a standardized accounting number. How can they say the numbers might not be comparable? Something weird is going on there.
Well, they have it. They had a huge write-off, a goodwill write-off from the purchase of that Village MD.
Okay.
They wrote some down in that process, and I'm thinking that they probably did not take that into consideration in the earnings number, because they lost. Their net loss was $6.85 a share.
Now that explains partially why the stock is down 21% since the beginning of the year.
Yeah. So they've had a rough year. They've had a rough quarter, and they're working their way through everything, trying to make themselves a medical, kind of like CVS. They want to be a one-stop medical shop.
Yeah, those two monster chains fascinate me. CVS buys a whole health insurance company and brings it in-house, basically. Walgreens turns around, buys a medical company, buys LabCorp. I mean, it's getting to the point right now where it's one stop for everything in the process. Walgreens had that good idea of putting a doctor in there, but the rest of it still, it's, two behemoths battling it out for our healthcare dollars.
Yep, and that's typical, because you see them right across the street from each other.
Oh, yeah. It's one stop. Walk across the street. You don't like your doctor at one drugstore, find another one. Other indications we got out of any of the companies? I didn't see a lot of gossip beyond that out there.
Well, the other retail side, we had Restoration Hardware, RH, reported. And they didn't have a really good quarter, Dave. They lost, I said they were $1 less than expected in their earnings for this last quarter. They earned 72 cents versus $1.71 they're expected to earn. And revenue was down as well. So you would think that stock would be down, right? Oh, no.
Mm-hmm.
They came out with some great guidance. They expect the revenue growth to be better than expected in 2024. And they're seeing improvement in their demand. And so they actually expect their full year revenue to grow between 8 and 10%. And the analysts only expected to grow a little over 6%. So they're, based on those numbers, they're actually up 10.5% this morning.
The Reader's Digest of that report was, we stunk last quarter, but things are looking up.
That's right. Absolutely. So, hey, we're gonna do well this quarter. So bias.
Gotta love it. Resetting the table. It was a nice up day yesterday on the major indexes. Let's see if we can keep it going. How are we doing 45 minutes before trading begins?
Hey, we've got a little bit, a tinge of green ink when it comes to the futures. The Dow is up less than 0.1%, like $30. The S&P 500 is up really $1. So not much at all. Yeah. NASDAQ 100.
Now I can buy Mom that operation.
Yes, the NASDAQ 100 is down about 0.1%. So not much movement there. On the other side, we're seeing silver down about 0.1%, still below 25 at $24.72. Gold's up 0.85%, so at $2,231. That's got to be getting close to a high if it's not a high. And then crude oil, Dave, is going the wrong direction, up 1.5% this morning to $82.61 a barrel. Yeah,
I think that's the highest we've seen it in a while.
Dude,
Overseas markets.
I saw gas at $3.65 yesterday.
I'm due to gas up again. I got to get my timing better. That's all there is to it. Overseas markets, the Chinese markets must like that surplus of solar panels because they were up. The overall Asian index probably about almost 1% of the close this morning on balance. European markets are, let's see here, go to that one. Marginally up. They're kind of following our futures. The overall European index up about 0.0015%, 45 minutes before we start trading this morning. Keeping tabs on retirement, doing it off of this report every morning, that means you got too dang much risk. How do I find you to get the risk out of my portfolio, Phillip?
David, give us a call at 863-382-0037 to schedule their core retirement analysis, or they can go to our website at statlerfinancial.com and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Sunday, 10 a.m. Sunday morning, and then on Highlands. Oh, I'm really messing it up today, Dave. News Talk 730 and 95.3 FM.
Very good. I was going to bail you out, but I figured I'd let you twist in the wind there for a second. Have a good afternoon, my friend. We'll see you shortly, all right?
All right, have a good one.
Be well. It's 105.7 Light FM at Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day, and I will talk to you tomorrow. Take care.